Good morning, good morning, good morning. Oh, good morning, Mr. Peter Benton. I've just remembered I need to reply to you, so bear with me. I'll reply to you shortly. Good morning, by the way. Good morning, everyone. You joined myself and Mr. Michael Brown for today's morning blast. It is Thursday, the 3rd of July, all day. As usual, we give you a review of yesterday, a preview of today. Hopefully put a smile on your face, add a bit of value, etc., etc., etc. But before we do, I will get the legals out the way. As usual, nothing discussed on this space session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed Mr. Michael Brown. Hello, Mr. Michael Brown. How are you?
Very good morning to you, Ryan. Good morning, everyone.
How are you feeling?
I'm as fit as a fiddle, mate. Never felt better.
Okay.
The morning blast may be a slight struggle this morning. I'm slightly off my usual top performance. I will apologise in advance for any mistakes that may be made. We were at a leaving drinks for a much loved colleague yesterday, and it went on much later than the 2 pints that I was
Yes, Michael
expecting to
Brown's
drink.
hungover. Yes.
Yes,
Um,
just a bit. I mean,
before.
to give you an idea, I've literally just walked into the office. That's
Oh, this is very late for you.
indeed,
Hardly
indeed, and
surprised
I'm
you
still the
turned
first
up.
one here.
Oh, right. Well, that's well. If anyone asks, you've been there for hours.
Exactly, I got here at 6:30. Don't worry.
Right. Before we start, I need to have a little rant.
Oh
Um,
God,
so I've just scrolling through Twitter as I do, and just making sure that PIQ's posting stuff mainly. And Pippa Crea, or however you pronounce the name, the Guardian's,
Guardian.
yeah, the Guardian's political editor. Um, when a reporter tries to cover something that they have no fucking idea about. So she's put this morning, and I quote, "Markets rally on opening after Keir Starmer backs Rachel Reeves to remain Chancellor in next election and for many years after."
Jesus.
Right? So one, quote, markets. What the fuck does she mean by markets? I know what she means. She means the fucking FTSE 100. Now, Pippa, one thing for you. The higher open in the FTSE has fucking zero to do with Starmer and Reeves and everything to do with just playing catch up to the US close, as happens every day, right? If the US markets have moved after the FTSE's closed, the chances are, unless something's happened since the US closed, which it hasn't, the FTSE will, recalibrate to wherever it needs to be in relation to that. It has zero fucking to do with Starmer and Reeves. If you want to start quoting markets based on the reaction to Starmer and Reeves, look at gilts, look at GBP, look at cable. Just, or better still, don't talk about markets at all because you don't have a fucking clue what you're talking about. Clearly, it was
I'm
a massive
glad to
red.
see you're in a good mood this
It
morning,
was a
Ryan.
massive red flag when I read markets rally because what markets? And then when I carried on reading, it got worse and worse. Now I don't mind Pippa. I think I know they English, well, not just English political reporters, but all reporters globally seems to kind of be in their own little bubble, and it's the Westminster bubble is famous. But I don't mind Pippa as a whole, but this is just bollocks, and so I have called her up on it. I doubt I'll get anywhere. I'm definitely not getting a postcard or a Christmas card. But anyway, that's my
You're
rant
certainly
over.
not getting a discount on your Guardian subscription, that's for sure.
Oh, I
Um,
don't know how I'd know. But anyway, sorry about that. Yeah, moving on.
No, that's all right. I'm glad you're in a good mood this morning. I guess we may as well start there, to be honest, because I think that was probably the main story of
Oh
yesterday. There
God.
wasn't especially much else going on. Just to sort of recap the latest episode in the soap opera that is UK politics. On Tuesday evening, I think we alluded to this on the call yesterday, the government tried to pass a welfare reform bill aimed at a whole host of spending cuts to try and sort of balance the books and meet the fiscal rules. What they ended up doing was actually passing a bill that, as a result of a whole host of rebel amendments that they were forced to make, actually ended up increasing welfare spending. Then at Prime Minister's Questions yesterday, of course, held every Wednesday. Keir Starmer was asked whether he still gives his full support to Chancellor Rachel Reeves, bearing in mind, of course, important context here. He's previously said a number of times that she will still be Chancellor at the next election. Starmer refused to reiterate that, which on its own was pretty bad news. What made that 10 times worse was the fact that sat behind him on the front bench was a blubbering, crying, emotional wreck of a chancellor who was crying on live television in the middle of the House of Commons. So, of course, financial markets reacting to that in pretty adverse fashion, putting two and two together, potentially getting five, but probably getting four in my mind, and saying this is likely pushing Rachel Reeves ever closer to the exit. Now, I will be very, very clear that Rachel Reeves has not offered to resign. Her spokesman says that this was all down to a personal issue. Prime Minister's spokesperson later on saying that Rachel Reeves does indeed have his full support. A bit of a sort of damage control exercise going on there. But nonetheless, markets taking the logical conclusion from this, which is that Rachel Reeves is on borrowed time and that the amount of borrowed time she has is even less than it was probably about 3 months ago. Now, what I would argue, actually, and I'm going to do Rachel Reeves a favour here if she's listening, is that the best argument for her keeping her job was the market reaction that we saw yesterday, with gilt selling off significantly across the curve. At one point, the 30-year yield was up by 20 basis points, trading north of 5.4%. The 10-year yield was up almost 20 basis points as well, and sterling was down by around about 1% intraday, briefly trading below 136. Now, the reason the market reacted so adversely to this is because there's essentially four ways that we can balance the books here in the UK. We can either try to raise taxes, which we've already done, and it has not worked. Furthermore, the main income
You're
raising
right.
measures. Oh, I'm absolutely fine. I was moving. The main income raising measures, income tax, national insurance and VAT, the Labour Party explicitly ruled out touching those in their manifesto. So option one is out the window. Option two, which is spending cuts. Well, good luck with that. We saw on Tuesday evening that the government simply cannot force through spending cuts in the House of Commons. Option three is, of course, to increase borrowing. And again, good luck with that in the current market that gilts are trading. So the logical conclusion that markets have drawn is that if Rachel Reeves were to leave as Chancellor, that does massively raise the prospect of either tax hikes to such an extent that it chokes off economic growth, or a change to the fiscal rules, both of which are very, very negative for UK PLC. So if I was Rachel Reeves this morning, I'd be speaking to Keir Starmer and saying, look what markets did yesterday on the mere rumour of me being moved on from my post. I know it's not a very good look, me sitting there crying in the Commons, but it would be this times 10 if you replaced Rachel Reeves with a much more left-wing alternative, which is still likely to happen. Let me be clear. I don't think Rachel Reeves is going to be delivering the budget in autumn. This is an unsustainable situation, but it may at least buy her a little bit more time. Anyway, aside from the latest political shambles here in the UK, as I said, it was a day relatively light on catalysts yesterday. We did have news of a trade deal, though. Trump saying that he has made a trade deal with Vietnam. A 20% tariff will be applied to Vietnamese imports into the United States, but that tariff will be doubled in the case of what is called transshipping. Now, I think this is particularly important because a lot of people were saying that one of the problems that the Trump administration may encounter is if, for example, you apply a tariff of, let's say, 100% on Chinese imports, well, there's not a lot to stop those Chinese factories sending them to Vietnam first and then sending them on from Vietnam to the United States. So Trump is clearly wising up to that and trying to prevent that from becoming a little bit of a loophole. The other reason I think it's important is because we already know that the sort of floor in terms of tariffs is 10%, that global baseline levy that the UK is subject to and everyone is subject to until that tariff pause expires next week. I think 40% is probably now likely to be the ceiling in terms of tariffs. So we are pretty much between 10 and 40%, and every country will end up in a bucket between those levels, depending on what they are able to negotiate. Other bits and bobs from yesterday, on the data front, we did have the latest unemployment figures out of the Eurozone, unemployment ticking higher to 6.3% in the month of May, up from a prior 6.2. We also had the ADP employment figure out of the United States, which pointed to employment in the private sector having fallen by 33,000 in the month of June, well below the 98,000 increase expected and also below the bottom of the forecast range. That was the first month-on-month decline since 2023, but it's ADP. So take it with an absolutely huge pinch of salt. I think the only thing that guarantees is that the NFP print later on will not be minus 33,000, given the incredibly loose
Michael,
relationship between the two. Go on.
Michael. So yeah, I know we've always, it's been like a running joke for as long as I can remember that ADP isn't great. Well, it's not a great predictor at the NFP,
Mm.
but given how bad NFP is, and given how large the revisions are these days, and given that every now and again the BIS come out and say, oh, by the way, we were out by 2 million last year, et cetera, et cetera. Um, what's to say now that really we haven't been looking at this all wrong, and ADP is actually more reliable?
Nothing, I suppose. I guess the way that we all look at it is, of course, through the lens of what does it tell us about the jobs report?
Well,
Because
this
that
is
is
it, right?
that's what we all hold up as the gold standard. It's essentially what you're saying is that the gold standard anymore?
Well,
I
yeah,
don't know.
pretty much.
In all honesty,
I know it's because it kind of feels like it's like it's what I think it's like a statement we roll out every month. Oh, ADP, it's the ginger stepchild of the NFP or whatever like that. But the more I think about it, and the more we're having such huge revisions added to the NFP, and literally the people that do an accounting come out and say, oh, by the way, last year we were out by 4 million. Yeah, there's
Mm.
huge issues with the NFP as a whole. Maybe because it's run by government, I don't know, or a
Well,
government kind of a government part. Um, so what's to say that this private number, ADP, which is a private number, what's to say that that's not far more reliable and actually more, you know, more illustrative. Look at that for a long word for me on a
bloody hell.
Thursday morning. Illustrative, I'm going to say it again, of what the real economy is doing. I mean, I've not seen anyone think about that in forever. Maybe it's time that we do. Maybe I've just hit on something that's far more above my my kind of, you know, my usual kind of bollocks.
Yeah, I very much doubt that, Ryan, to be honest. And to be frank with you, I'm not in a fit state to debate that this morning. So we
I'll
will
take
move.
that as a win then.
Exactly. So we will move very swiftly on. A couple of other headlines from yesterday. Firstly, political in the United States. The one big beautiful bill that is continuing to make its way through Congress. That is currently sat in the House. There's various procedural votes that are going on at the moment. I think they've just actually voted in favour of the rules motion, which is effectively allowing that debate to take place. And then they will probably vote on the entire bill in sort of 4 or 5 hours' time. Of course, the aim is still to get that onto the president's desk for Independence Day, which is tomorrow. Speaking of the Trump administration, they have given up on the idea of building another new fighter jet. This is the FAXX, catchy name, program that was going to be the next carrier jet for the US Navy. Essentially, the Trump administration have turned around and said, we don't think that the defense industrial base in the United States is going to be able to build two fighter jets at the same time. Of course, they are also building the F-47 for the for the Air Force, forgive me. This is notable for the likes of Boeing and Northrop Grumman, who are in the running for the contract, but it seems that has crash landed for the time being.
Oh,
Um, moving
eject,
on.
eject, eject.
Oh dear. Moving on from that, Netflix, they have apparently been talking about with Spotify about a potential partnership. They want to run a music awards show and potentially a live concert series. So one to watch there, and we'll see whether or not that hits the spot with viewers. And
Oh.
lastly, Microsoft going back to the labour market, actually nice segue there. Microsoft are going to be cutting 9,000 workers in what is a second wave of significant layoffs at the firm in a couple of months. I think this is certainly one to keep an eye on if it becomes a bit of a broader trend in the tech sector. I know we all sort of make a bit of I see Tom Talks Cars is on the call. We make a bit of a joke about how rapidly tech companies spend money and, seem to put 1 million people on £500,000 a year salaries and all the rest of it. If we are seeing Microsoft begin layoffs, are we going to see other firms in the industry do a similar thing? So potentially one to keep an eye on there. And for the time being, that is all from me.
Well, thank you very much. I think you held that relatively well together, considering how hungover you are. Just an
Consummate
update on
professional,
Pip.
mate.
Yeah, just an update on Pippa. She has replied saying she's actually referring to the gilt market, so I take it back a little bit, but still, this stinks of just a little relief rally, relief bump on the the harsh move we had yesterday. I'm hesitant to put too much into this. Is the gilt market signalling that they're a-okay with what's going on in Parliament, because they're obviously not. But yeah, one to keep an eye on. But again, it could be worse. We could have someone far more lefty than Reeves, but yeah, then we are in the shit.
Sort of better the devil you know, I think, is the
Well,
situation there.
yeah. Unfortunately, the devil is shit at doing her job.
Well, there is
Anyway.
that.
So anyway, thank you for that. So cracking on with some overnight news from our good friend Zach Eisman. Do follow him. Do follow our Substack for the best way to keep up to date with all the market moving news overnight. Starting off with trade. US-China trade developments. US lifts restrictions on chip design software exports to China, with Synopsys and Cadence and Siemens resuming sales. That's going to Wall Street Journal and the FT. The US removes license requirements for ethane gas exports to China, easing deliveries. That's according to Bloomberg. On US-India tariff talks, negotiations aim for a tariff-reducing deal by Trump's July 9th deadline, but disputes over dairy and agriculture persist. That's according to Reuters. US
All right,
and
stop
South Korea.
milking it.
Oh God! Look, you're hungover. So just sit down, take a breather. U.S. South Korea tariff negotiations. South Korea's President Lee expresses uncertainty about meeting the July 8th deadline. I believe it means the 9th. Maybe that's 8th in South Korea time. Citing unclear U.S. demands and challenging talks. That's according to Reuters. Although I suppose is it midnight on July 8th? Maybe that's what it is. Is that when the
I think it's midnight Eastern time in the US.
Oh, okay. The Mercosur Europe trade deal. This is obviously Europe and South American countries. The bloc, the South America's Mercosur. Is that how you pronounce Mercosur?
I think it's Mercosur, but I'm not entirely sure.
Mercosur. South Africa's the black one, bloc, and four small European nations finalised a decade-long free trade agreement covering nearly all shipments. So there you go. When you haven't got someone like Trump in power, it takes a decade. So I think doing it in a few months is quite a good move. Macro highlights, US political and economic developments. We've got the House GOP, the GOP plan, a 3:30 a.m. ET rule vote, and a 5:30 a.m. ET final vote on the Trump bill. I'm guessing this is coming up, not this morning, it's already happened, but I'll be honest, I've missed this if it has already happened. Trump calls for the FHFA head's resignation over Fed Chair Powell investigation remarks. That's gone to Truth Social. UBS survey, 66% of reserve managers fear Fed independence is at risk. 50% see US rule of law decline impacting asset allocation. YouGov WSJ poll, they say that 46% of Trump voters now attribute economy to Trump versus 34% to Biden versus the prior trend. In global monetary and economic trends, UBS survey highlights weaponization of FX boosting gold holdings among reserve managers. BOJ's Takata signals readiness to tighten policy in US trade talk advance. Sticking with Japan's service PMI shows faster growth with business confidence at a 4-month high. China's private Kuxin services PMI dips to 50.6 in June, weaker since September. Sticking with China, PBOC seeks European advice on low interest rate effects amid low inflation risks. Moving to the ECB, officials wary of euro strength impacting inflation targets. And European treasurers shift to costly options for currency hedging due to Trump's trade policies. Regional economic updates. Japan's 30-year bond auction showed strong demand, reducing market turmoil risks. Foreign investment, Japanese equities rise, mostly unhedged, possibly due to yen strength expectations. Hong Kong retailers face store closures as consumer spending shifts to mainland China. Australia's service sector accelerates with business confidence at a 3-year high. Malaysia, their central bank made cut rates on July 9th amid declining exports. And India, their equity markets driven by domestic institutional investors nearing 2024's record inflows. Geopolitical news. Just a quick one. Senior Chinese officials express optimism about US-China ties despite Trump's trade war disruptions. That's gone to Bloomberg. Finally, some equity news before I head back to Mr. Michael Brown in the studio. Key movers, Starboard Value takes 9% stake in TripAdvisor after rejected takeover offer. Tesla in China, their sales are up 3.7% year on year. 59% month on month, 59% month on month to 61,000 vehicles, still massively behind their peers over in China. So just bear that in mind for a bit of context. Datadog joins S&P 500, replacing Juniper Networks post HPE acquisition. See you at pack on. Sector updates before I head back. Uber drivers in British Columbia unionised for collective agreements. Meta's AI climate tool criticised for misleading CO2 removal claims. DeepSeek ramps up global talent recruitment. Oh, just on this, I heard yesterday that the top AI executives at Meta are on 100 million basic salary.
Bloody hell.
That is massive. Um, oi, oi. Sorry. AirAsia nears
Also, just
deal.
on
Go on.
DeepSeek,
On my
apparently,
massive what? Sorry, go on.
no. On DeepSeek, of course, there's absolutely nothing nefarious or dodgy about the firm whatsoever,
No,
according to Tom Talks Cars and not the experts who tell us that they're in fact in cahoots with the Chinese government.
no, absolutely not. Nothing to see here. Moving on. Oh, sorry, I've done that one. Sorry. AirAsia nears deal for more Airbus planes during Malaysia PM's France visit. Japanese department stores lag market rally due to strong yen and low consumer confidence. Ryanair cancels 170 flights due to French air traffic control strike. Oh, it sounds like the French to be striking. They'll be
That's
protesting
rare, isn't it?
next. And finally, from me, Novartis fails late stage study for blood vessel inflammation, so that'd be a negative for the stock. That's gone to Bloomberg. And back to you in the studio.
Good stuff. Thank you, Ryan. Well, of course, moving to the day ahead, it is Jobs Day in the United States. I know it is Thursday. I know that's unusual, but it is, of course, Independence Day tomorrow. So the labour market figures are due a day early. I'll get onto that momentarily, but just to run through everything else that's going on today before we get to that jobs print, we do have a whole host of services PMI figures due this morning. These are final prints from the Eurozone and the UK, so I wouldn't expect them to be especially market moving. We do also have the release of minutes from the June ECB meeting. They are due out at lunchtime. Anyway, of course, the main event today comes at 1:30 this afternoon in the form of that June US labour market report. Headline non-farm payrolls expected to have risen by 110,000 last month. A modest slowdown from the 139,000 that we saw last time out in May, but still well above the break-even rate, which is around 80 to 100,000. The range of estimates for that payrolls print is actually surprisingly tight for the second month running, between 70,000 at the low and 160,000 at the high. Leading indicators for the jobs number actually point to some downside risk to that consensus expectation, with initial jobless claims having risen by 20,000 around approximately between the May and June survey weeks, and continuing claims having risen by almost
Bless me.
70,000 over that. Ooh, blimey, you all right?
Sorry. Yeah, I sneezed. Sorry. I
Oh,
couldn't mute. I
bless
couldn't
you.
find the mute button.
And continuing claims having risen by almost 70,000 between those two survey weeks, with the latter still sat at cycle highs. Of course, we also had that miss on the ADP figure that we discussed a moment ago, and the ISM manufacturing survey pointed to a deeper contraction, a faster pace of contraction in employment in the sector in June. In terms of other factors to be aware of, there's likely to be a further unwind of the temporary hiring that we saw around the tariff front running. That was also spoken to in the Challenger layoffs report that we had yesterday, which actually pointed to all of the temporary hiring in transport and logistics having now been unwound. On the other hand, though, we did see around half the pace of federal layoffs in the month of June compared to that in May, so that may be a little bit of a boost. In terms of other areas of that jobs report, average hourly earnings, they're seen having risen by 0.3% on the month and by 3.8% on the year, both of which would be 0.1 percentage points lower than we saw last time out, and both of which would also reinforce the Fed's long-standing view that the labour market is not a source of significant upside inflation risks at this moment in time. Turning to the household survey, unemployment, that is seen rising to 4.3%. Although I would just preface this by saying that although the prior was 4.2, in reality, this wouldn't actually be a huge jump because, and I'm going to get very nerdy here, the unrounded unemployment rate that we saw last time out was actually at 4.2443%. So it doesn't actually take a huge jump for that to round up to 4.3. Participation, meanwhile, that's seen rebounding to 62.5% from a prior 62.4. Now, of course, in terms of context around the report, there has been a lot of focus on the labour market recently, particularly amid that rise in initial and continuing jobless claims. So a miss here would be a significant dent in the narrative around the US economy remaining pretty solid and resilient under the surface, despite all of the ongoing tariff uncertainty. Money markets come into the jobs report pricing around a 1 in 4 chance of a 25 basis point cut from the Fed at the end of this month, and pricing around 66 basis points of easing by year end. The odds on that July cut, which I still view as unlikely, would naturally increase in the event of a soft jobs report later on today. And I think in terms of the market reaction, it's very much going to be a case of a focus on what the jobs data tells us about the economy, as opposed to any potential policy implications. At least in the very short term, it's likely to be a case of good news is good news and bad news is bad news when we're speaking about risk assets. In terms of other events after the jobs report, well, actually at the same time as that payrolls number, we get the weekly US jobless claims figures. Now, it sort of goes without saying that neither of those, the initial nor the continuing claims print, pertains to the June non-farm payroll survey week. And it also rather goes without saying that both of those will be massively overshadowed by the June jobs report, which drops at the same time. And then lastly, but by no means least, at 3 o'clock this afternoon, we have the latest ISM services PMI. That is seen rising to 50.7, up from a prior 49.9. And we also get the May factory orders report out of the States as well. Last but by no means least, I know we've alluded to it a few times on the call already, but do of course remember that tomorrow is Independence Day. As a result of that, the US will be pretty much entirely closed. We also have some early closes throughout the day today.
Sorry, because I know you're really hungover. When you be that, I'm like in my head, I'm like, please say he's thrown up in his mouth.
No, there's none of that going on. Don't you worry. Where was I? Early closes today. Yes, the cash equity market in the United States closes at 6 o'clock this evening, London time, and cash treasuries close at 7 o'clock this evening, London time. Although I would expect liquidity and volumes to become much like my Barnet much sooner than those
Spin and
times.
wispy.
Indeed, I would expect a lot of people will be looking to head for the exit pretty soon after that jobs report, especially if the figures are broadly or roughly in line with market expectations. And that for this morning is all from me, thankfully.
Well, thank you very much, Mr. Mike Brown. I really do appreciate you stepping up, even though you've got a massive hangover. Welcome,
Now I'm
welcome
going to
to.
go and find a cold and dark room to lie in for a few
I thought you
hours
were going
now.
to say a cold pint. To be honest, I'm sure the railway will be open already by now. One for the London crowd. Right, but anyway, thank you very much. It's a holiday tomorrow. Are we doing a blast?
Oh, we might as well.
Yeah,
We've
go
got a
on.
jobs
Well,
report to talk about.
Oh, yeah, exactly that. Yeah, definitely. Okay, Mr. Mike Brown, I'll see you tomorrow. Listeners, thank you as always for tuning in. To be honest, I've just had a quick scan through Twitter whilst you were talking. So Cam, who I do the crypto show with, next one will be on Friday, posted a headline that's probably worth reading out, that North Korean hackers are targeting people with Apple devices, regards into their crypto. So if you do have anything to do with your crypto accounts on Apple, do make sure it's all safe. But yeah, from us for now, that's it. And we'll see you all tomorrow. Much love.
Bye for now.